All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen, Tuesday, the 15th of July. So, everybody, welcome to mid month. We have some important economic data sets coming out today, so I just wanted to quickly touch on those. And of course, that's the US inflation number, which is coming out. So, hey, I'll pick up on that one. But before we jump into action, let me have a quick read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, as you know, of course, tariffs is one thing, but economic data is very important as well, especially politically, and I'll explain why. Also very quickly mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the dollar index. I'll get back into this in a bit, but hey, look, yes, Tuesday today, yeah. By the way, we got some Chinese data, big massive drop of different types of data here, economic data. So yes, the GDP growth rate Q on Q and year on year came out higher than the forecast, but still lower than the previous, which is still fine to be honest. Industrial production still remains elevated, so that's great. Retail sales are a little bit on the lower side, so not very good moment here. And unemployment is somewhat flat. So in general, China still is kind of okay-ish, I would say. The only problem, of course, is the dropping retail sales number. But of course, the focus today is on the US inflation numbers, which are coming out together with the Canadian ones. But look, I'll pick up on the U.S. mainly. First of all, the core and the headline year-on-year numbers in the U.S. are expected to come out a little bit on the higher side. The headline one is expected to come out a little bit higher than the core, and just going for we're expecting a 30 basis point jump here, unlike the 20 basis point in the core figure. Look, this can be explained by the fact that we saw oil in June skyrocketing initially, and then of course it stabilized at the end of the month. However, still the fact that it skyrocketed, maybe that kind of raised some fear among some of the retailers and producers. And yes, this whole conflict in the Middle East kind of sparked this, and we know that it was initially started off with Israel launching rockets at Iran, and this is how it kind of Iran had to respond, and we had this whole big political show in a way, with unfortunately with casualties. But anyway, that's how politics normally work, right? Look, oil prices, yes, are a little bit on the decline right now, and I was always bearish on. I'm still bearish in oil, but that's another topic basically. But looking at the economic data, okay, look. We might see a little bit of an increase. Don't get me wrong. Maybe the core could come out somewhere around 3%, but something tells me maybe the headline figure, it could come out higher than the previous, but maybe it's just going to be somewhere in between the forecast and the previous number. Yes, we could see a little bit of a push higher because of some tensions, some commodity price increases in June. But in general, I don't think that even if inflation is picking up right now strongly, I don't think it's going to be it's not going to be shown as a high number, because look, the White House administration does not need a higher number, because the whole point right now, they're trying to force the Fed to do some rate cuts, and how can you do some rate cuts when you have an up move inflation again, right? So this is the chart of the headline year-on-year inflation number in the U.S. And yes, we are seeing this little uptick. We have seen this little uptick recently. So if it starts climbing up again here, well, this is where there it could raise a few concerns. So that's why I don't think that we will see a major number unless it's going to be a surprise. Of course, I don't have the crystal ball. I can just assume. I can just try to analyze this, but in general, certain things probably went higher, certain things probably went cheaper a little bit. We are, like I said, we have also some tariffs, but again, at the moment, tariffs are not fully embedded. They're kind of still up in the air. There are a few increases, so maybe some producers have ramped up the prices a little bit, or maybe on the contrary, they were trying to get rid of the stock, the cheaper stock, and just kind of buy some new ones to justify the increase in price. So again, it's a very tricky moment, and look, I think the tariff can will be kicked further and further down the line. I don't think that somebody will eventually go for that. Maybe there will be like maybe, like I said, the goal is to put that flat 10-15% on all imports into the US, and kind of that's it, with the help of threatening everybody, but with 30, 50, 70% tariffs, you just kind of you do that, and then the main goal is just to put that 10-15%, because hey, you'll say, well, it's better than the 30, 50, 70, right? I mean, so just accept the 10, 15. And that's what maybe the goal is here. And but again, if you need lower interest rates and you want the Fed to do so, you cannot have higher inflation. So that means that we are. Like I said, I really don't think that we could see a very high number here. Look, in case of the, but again, like I said, with the numbers, whatever they're going to come out with, we'll deal with that at that point. But what I'm looking at here as well is, of course, the U.S. dollar index, which has been pushing a little bit higher recently. In general, if you have been following my videos, you'll probably understand that I have been still bearish on U.S. dollar. Why? Because again, you need a cheaper dollar at this point, because you're selling a lot of military equipment to the whole world. Oh, sorry, the whole world, but your biggest partners, so the EU, Israel, and basically, yes, you need to make your military equipment more affordable for them, and for that you don't need a strong dollar. So it means that maybe we could see some more downside. So this little push higher right now that we're seeing, maybe this is kind of in line with the fact that we're expecting a higher inflation. We're not really expecting a rate cut this month, at the end of this month, because again, as you know, we're having the 30th of July, we're having that interest rate decision from the Federal Reserve, and we are forecasting no action. Well, the main action is forecasted in September and December. Basically, by the end of the year, we're forecasting 2 cuts, one in September, one in December. That's for now. Unless Jerome Powell gets fired and they put their own guy who's in favor of going for some more cuts and all that stuff. And but then you're going to see the U.S. dollar probably falling off the cliff a little bit, maybe not drastically, but just at least a small cliff. So because that's not going to be favorable for the U.S. dollar, because we know that the new person would be in favor of going for those cuts. So long story short, for now, we are, like I said, we are looking at this, and I can consider a few moves to the upside, maybe back towards that 99 zone somewhere here, or actually 98.5 zone. I think that could be a good one. But higher, look, if all these all these factors that I just mentioned are going to go down the drain, they're not going to be picked up on, then yeah, we could see the US dollar pushing higher, maybe going back to that 100 level. But at this point, I'm still, like I said, I'm still considering a little bit maybe more of a retracement. But again, I like this 50-day EMA if we're talking about If we're talking about technical analysis here, then yes, I'm looking at this 50-day EMA shown as the green line. So yep, if we might get a test of this one. If it holds, another decline here could be possible. And like I said, all the stars would align perfectly in this case. Look, again, this is just theory, of course. We need to wait and see what's going to happen with the inflation numbers, with the U.S. inflation numbers. If you would ask me to apply technical analysis on this, I would say, I'm looking at this. This is one of those formations which kind of breaks out to the upside in a way, because whenever we have a strong decline and then a gradual decline, it kind of goes up nicely later on. But again, that's technical analysis. We do not apply it on this chart. It's just, like I said, just as something for fun. So yeah, like I said, keep your eyes on this, of course. Keep your eyes on the economic data today. Canadian inflation numbers. The year-on-year number is expected to tick up a little bit higher, but it's still within the BOC's inflation target, which is between 1% and 3%. So the median's 2. Yeah, so yeah, it's still somewhere there. So in a way, no major policy changes on that front, unless it really actually comes out below the forecast. Let's say it comes out at 1.7 still. That would be a bit of a bummer, I think, for the Canadian dollar. And given that we are seeing oil declining, we're seeing where's that USD CAD? We're seeing oil declining. We're seeing a lower inflation number. So maybe this could actually break this downside line. We could see USD CAD strengthening here, not because of the US dollar maybe, but just because of the factors that are weakening the Canadian dollar. Again, just a thought here. Let's see what's the actual number going to happen, or what come out. What will the actual number be? Ladies and gentlemen, if you have any suggestions or any comments, please feel free to leave those in the comment box, and please don't forget to subscribe if you don't want to miss any of these upcoming videos, the top news videos, the Markets Talk webinar, which I do every Monday, Wednesday, Friday, which you can join as a live session, or if you cannot join the live session, you can always scroll through it until you hit the instrument that I'm talking, because I'm picking up on a lot of stuff in there and on different asset classes. So, ladies and gentlemen, like I said, check out our YouTube page in general. I think you'll find some good info there. So, once again, ladies and gentlemen, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you next time.